Good morning and welcome back. My name is Jonah Bicroft. In this tutorial, you will learn step by step on how to prepare Debtors Statement of Account. Whether you are a student or a beginner in accounting, or just need a refresher, this video break it down for you with simple examples. Grab your writing material. Let's dive in. What is a debtor statement? A debtor statement of account is the summary of all transactions between a business and a customer. When I mean a customer, I mean a debtor, over a certain period, say 1 month. It shows invoice issued by the supplier to the customer. It shows payment made by the customer. It also shows credit notes over payments or underpayments made by the customer. That is what a debtor statement is: a summary of a business transaction between the customer and the business. You can write a debtor statement, also called customer statement of account, is a summary of all transactions between a business and a customer. When I say customer, I also mean debtor, over a certain period of time, say 1 month. Debtor statement of account shows invoice issued, payment received, and notes and the amount outstanding. That is to say that a customer statement of account shows the transaction between the business and a customer. A customer in this sense is a credit customer or a debtor. It shows the invoices issued to the customer. It shows all the payment made by the customer. It shows all the credit notes. It shows overpayment and or underpayment, and it also shows the outstanding balance. Now, what is the purpose of debtors statement of accounts? The first purpose of debtor statement of account is it reminds the debtor of the outstanding amount. That is to say, it reminds the debtor that this is the amount that you are owing me from this period to this period. This is the amount you are owing me. And secondly, it assists in credit control. A debtor's statement of account assists in credit control. The first one, it reminds the debtor of the outstanding balances or outstanding amounts. It assists in credit control. That is the second one. Then the third one is helps reconcile customer accounts. The third one is it aids credit control. 2, it helps in reconciling customer accounts. And 3, it aids in credit control. Why 4? it prevents disputes over payments or balances. It prevents dispute over payments or balances. That is it. Number 4 says it prevents dispute over payments or balances. That means it will enable the customer to know that it is the exact amount that you are owing, and the supplier, which is the business, to ascertain precisely that the particular amount that the customer is owing. Now let us take a look at step by step on how to prepare the Debtor's Statement of Accounts. Step by step on how to prepare Debtor's Statement of Accounts or Debtor's Statement. The first thing you do is to list all the invoices issued to the customer. You list all the invoices issued to the customer. Secondly, you record all the payments made by the customer. List all the invoices sent to the customer. 2, record all the payments made or received from the customer. Record customer payments. 3, also record credit notes, returns, and overcharge. Record any credit notes, any return, overcharge or undercharge, etc. These are the steps you will adopt when you want to prepare a debtor statement of accounts. Now let us look at the skeleton here, or how it look like. We are going to take a look at the sample of how it look like. After doing this, the next thing you will do is to calculate the running balance. That is, you take the differences, what he has paid, what you have supplied, and what he has paid, and what he has returned, or overcharged or undercharged, and you take the differences. The difference is the amount the debtor is owing to the business. Now let us take a look at the sample of or the component of a debtor statement of account. You will have the date, you will have the description or details, you have the reference number of transaction, you have the debit side, the debit, you have the credit, and the balance. Now the date is crucial, for every transaction must have occurred in a particular date. The reference number is a reference number of the source document. Now this is debtor accounts. Anything that will increase it, like invoices supply or goods supply, will be recorded at the debit side, and anything that will reduce it, like payments or credit notes, will reduce it. And you take the balance in the last column. Now the date is crucial. Description of the transaction that take place is very, very important. Is it a sales on credit? Is it supply? Is it payment? Is it return? Is it credit note? That must be properly stated. The reference is the reference number of the source document. There is no transaction that will be done without source document, and all source document must have a number. On the debit side, every transaction that increases the debtor will be recorded by the debit side. For example, supply will be recorded on the credit and on the debit side. Now, on the credit side is where you record all payments made or return made by the customer, and you strike a balance between the debit side and the credit side, and you put the balance at the last column as balance. So this is the component of the debtor statement of accounts. Now we are going to take a practical example of how the debtor statement of account look like. The debtor statement of account is likened to the statement of account issued by bank to our customers. So let's go and take a look at a practical example of a debtor statement of accounts. It's a prepared the statement of account for Don Zion with the data of X, Y, and Z and Co. X, Y, Z and Co. Now, Don Zion is the supplier, S, Y, and Co. is the debtor or the credit customer. And so we begin by taking a look at the question, the information given to us. The document, they gave us document, the date, the ref number, the particular, and the amount. By January 2nd, there was an invoice. The ref number of the invoice is 024. And the particular or the details of transaction is goods supply. And the amount is given as 4,820. Then January 3rd is an invoice. It's also a supply. And the amount is 8,240. Then January 4th, there's a debit note. The invoice number is given and the transaction is returned. And that return is 360. Receipt by January 4, the receipt number is given. It is cash paid. Description cash paid. And the amount that is paid is 10,820. Another one, invoice by January 8th, the invoice number is there. It is goods supply. And the amount is given as just let us rule it so that they will not join together. Yes. Now the next one is invoice by January 10, goods supply. Let us first of all put that one. The goods supply is what? The goods supply is 5462. On the 18th, there was goods supply also, and the amount is 6,325. There's a debit note issued by January 21, the goods returned, and the value is 2,132. The January 28 invoice was issued. It is good supply, or no, good return. A good return too, and the amount is 3,256. Now, receipt on January 29 is cash payment, which is 15,584. Now, that is the end. Then additional information. Additional information. The last statement sent by Don Zion showed that XYZ owed him 7,215 at 1st January 2025. Yes. And another information says a check for 3,500 in favor of Don Zion on 30th January 2025 has just been received. Yes, this is the question. So what we need to do is to prepare a Debtor's Statement of Account. Now, the summary of this one is this. Let us take the summary of this. The summary is this. Yes, this is summary. That by January 1, 2025, SYZ and Co. is owing 7,250. That 7,250 becomes the balance brought forward, which is what? A debit. So it will be by the debit of, the statement of account. Then 20, on the second, you have good supply. And that good supply is going to also be posted to the debit side. And all of them will have a debit balance. On the third, is what? Good supply also is going to be posted there. On the fourth, there was return. Return is going to be posted by the credit side. It reduces the debt. Then on the fifth, receipt, that is cash paid on the fifth, is going to reduce it. So it's going to be posted to the what? Credit side. On the 6th, there was supply, and it's going to be by the debit side. On the 12th, there was supply, it's also going to be by the debit side. Then on the 18th, there was supply also. In fact, all supply will be by the debit side. All return will go to the credit side. All cash payment will go to the what? Credit side. The balances and the check that was issued on 30th of January 2025 will also go toward the credit side. So let us go. Now we are going to prepare, the debtors accounts. We are going to prepare the debtor statement of account. The first thing is Don Zion and Son. Don Zion and Son is the supplier, while XYZ Consort is the debtor or the credit customer. Now Don Zion and Son is addressing this letter. It's a formal letter, official letter, to XYZ Consort, who is a customer. Now there must be a date in this document. The title of the document, Customer's Statement of Accounts for the month of January 30th, as at January 30th, 2025. And this is the written notes. This is to remind you that your indebtedness to us as at January 30, 2025 is 9,374 as analyzed below. The analysis is what we are going to do now. We will appreciate a prompt settlement of these debts. These notes or this information is reminding XYZ Consult that they are owing as at the 30th of January 2025 that their standing balance they are owing is 9,374 naira. Then the analysis is this: you have the dates, you have the details, that is the description or details or narrative, you have the ref number, you have the debit, everything that increases this statement will be by the debit side, while everything that reduces it will be by the credit side. At the end, we run the balances and take it to the balance column. Now, by January, the amount that XYZ is owing Don Zion and Son is what we have in this place. That is something we have it at the amount that is 1 January brought forward is 7,250, and this balance is to be by the debit side or a debit balance. So we go. So January 1st balance brought down will be 7,215. It is a debit balance. Goods supply will be a debit balance also. Goods supply will be a debit balance. It's going to add to the balance brought forward. On the 3rd, there's goods supply also. It's a debit balance, which is 8,240 plus 12,036. It becomes 20,275 debits. It's a debit balance. By January 4, there is good return. Good return will reduce it, so it's going to be by the credit side, and you deduct that from the balances you have already gotten. That is 20,275 minus 360, and you now have 19,106 debit, still debit. Then by January 8, you have received, that is cash is paid. We receive cash, and the check number is there, and the amount is 10,820. Is to be by the credit side. We reduce that from 19,915. The balance becomes 9,005 naira debits. On the 6th, good is supply, and it will be by the debit side. 6,502. You add it to the outstanding balance, it becomes 19,000. It becomes 19,547. On the 12th, there was good supply also. Good supplies will be posted at the debit side, and we increase balances. If you add it to the balances, it will become 21,009 naira debits. So we are going to continue in the next slide. We are going to carry forward this 21,000 naira to the next slide. Yes. So when we carry it to the next slide, we begin from there. We'll start the posting from there. Now we want to make one important point clear here. Now this document, which is the statement of accounts of Don Zion that is issued to XYZ and Co., is an official document. So being an official document, the dates will be, the address will be is crucial. Now, the address of Don Zion and Son must be written in full. We just make it short here because of space. It must be written in full, and it should be in form of this. Don Zion and Co. 51 Lower Irregular Warri, Delta States. And practically, we must write it in full like this. Okay? Also, the address of the debtor or the credit customer must also be in full, and so must be in form like this. No, must be in form like this. Must be in form like this. XYZ Consult are 15 Upper Irregular Warri, Delta State, Nigeria, and must accompany by the date. These things are important because they are official documents. We did the abbreviation here because of the size of our slides. Now, we are going to proceed or continue with our posting. And we are going to carry forward the last balance, which is 21,009 debit, to the next slide, and we'll continue there to ascertain the actual amount that XYZ will be indebted to Don Zion at the end of January 2025. Let's proceed. Now we are going to do the same thing here. We have succeeded in posting 1 to 12. So we are going to begin our posting here from 18, which is goods supply, then goods return, goods supply, received, and check dispatch. That is where we are going to begin our posting from this slide. Now we set it down to the dates and the details, the document ref number, the debit and the credit side, and also the balances. Then by January 18, then that is where we are going to begin. What we have there is by January 18 should be January 18 should be goods supply 6,325. Yes, 6,325 and 6,325. No, that is a mix-up. First of all, we bring down the balance from January 12 that we have just calculated, which is 21,009 debit side. Now we take the transaction on January 18, which is goods supply, and goods supply will be by the debit side. So we are going to post goods supply to the debit side, and that amount is 6,325. That's on the 18, 6,325. Now the next thing we are going to do is transaction of 21, which is good return. Good return is 2,132. Good return 3,132. Good return is going to be by the credit side, and the invoice is given. The ref is given 3,132. And when you reduce it from 27,334, you have the balance there. The next transaction is goods supply on the 28th. The ref number is given. Goods supply should be by the debit side. When you add it to the balance and add the balance of remove the balance of good return, you will have 28,458 still on the debit. The debit balance. By January 29, there was cash payment or check issue, which number is A3450. And when check is issued or cash is paid, it will be by the credit side to reduce the debt that XYZ and Co is owing. And when you remove that one, 10,000 50,584 from 28,458, and you have a balance of 12,874 debit. Now, by January 30th, check was issued by XYZ in favor of Don Zion and Co. And that check will be by what? At the credit side, as it reduces the amount that XY and Co is owing. And when you reduce 3,500 from 12,874 debit balance, what you will have is 9,374 debits. And that is the outstanding balance that XYZ and Co is owing to Don Zion and Son. Of course, this is an official document. It must be signed by an authority authorizing an official of Don Zion and Co. And the authorizing officer is Mr. Brown Smith, who is the accountant, and is going to append the signature here as such. So the amount that XYZ Consort is owing to Don Zion and Son as at the end of January, 30th January 2025 is 9,374. Now, the debtor statement of account is similar to the creditor statement of accounts, but there is a difference. The difference is that while this debtor statement of account is being recorded by the supplier, is recording a current account statement. That is why it has a debit balance. Then the creditor statement of account is recorded or is prepared by the creditor itself, by the company that purchases on credit, and so it is a liability account. It is just like the bank and the customer. While the customer is keeping the cash book, which is an asset, the bank, who is in custody of the money, is keeping a liability account. On this note, we have come to the end of this tutorial. Share this tutorial. Assist us to like this tutorial and subscribe to our channel. Our next tutorial will be Creditor's Statement of Accounts. Until then, take care of yourself. Bye.